Welcome to the topic Challenges of Finance. As we discussed in the previous video, there are just two challenges of finance that apply to all the four participants in an economy. They are valuation of assets, things, services, etc., and management of those assets. Once value is established, management becomes easy. For example, when you want to buy a car, you look at the value of various cars and then decide to buy a car that fits your budget. So value comes first. You make your decisions based on the value and your goal. Your goal here is to buy a car that you like within your budget. So now let's look at valuation and management in further detail. When you address the issue of valuation, you will come across the following questions. What is value? How are financial assets valued? How should financial assets be valued? How do financial markets determine asset values? How well do financial markets work? Can we always rely on them to work out well? When it comes to management, when you have to manage the assets that you have valued, you're basically thinking about how much should I save or spend? How much should I buy or sell? When should I buy or sell? How should I finance the transactions? Now, these are basically financial management decisions. Let us look at each of the above financial management decisions in further detail. The above decisions in corporate finance are termed as capital budgeting decisions, capital structure decisions, working capital decisions, and dividend decisions. Typically, these decisions come under the purview of the financial manager of a firm. Now, when we look at capital budgeting decisions, the second and third questions, what should I buy or sell, and when should I buy or sell, can be rephrased as what long-term investment should the firm take on, what lines of businesses will a firm be in, what sort of buildings, machinery and equipment will it need. These questions concern long-term investments of a firm. The process of planning and managing a firm's long-term investments is called capital budgeting. These are the decisions that the financial manager of Type 3 and Type 4 participants make. Now let's look at capital structure decisions. The answer to the fourth question, how should I finance the transaction? Or where will I get the long-term financing to pay for the investment? Should I bring in other owners? Or should I borrow the money? These questions involve capital structure decision. So capital structure is the specific mix of equity, which is owner's money, and debt, which is borrowings, used by a firm to finance a long-term investment. The money flowing from Type 2 participants to Type 3 participants may be either in the form of equity or debt or a combination of the two. The third type of decision is working capital decision. If we look at the first half of the question as what should I spend, we are looking at how will I manage my everyday financial activities such as collecting from customers and paying suppliers. This question concerns working capital management. It refers to short-term assets such as inventory, short-term liabilities such as money owed to suppliers. In other words, working capital management involves day-to-day decisions such as should we sell on cash or credit and at what terms? Can we purchase on credit or borrow and pay cash? How much inventory should we maintain? The fourth financial management decision is the dividend decision. The other half of the first question, what should I save, can be reworded as what part of my profits should I save to take care of my future needs and investments, and what part of it should I pay back to the owners, involves dividend decisions. Dividend is the portion of profits that are distributed to the owners or equity holders. The above four decisions form the basis of financial management decisions. So in this video, we learned about challenges of finance, which are essentially valuation of assets and management of those assets. Now, management of those assets boil down to four financial management decisions, namely capital budgeting decisions, capital structure decisions, working capital decisions, and dividend decisions.